The operating activities section is where we'll find most of our cash flows. Let's just recap. It's the cash flows resulting from the provision of goods and services in the day-to-day operations of the business. So cash inflows came from selling goods and services to customers, and cash outflows came from payments to employees and suppliers of goods and services. So we'd hopefully always expect a positive in this section, as in the net cash flow at the end. So in the one we've been shown here is $11,000. We really need that to be positive for this section. And the reason why is this is what we do. Our business is about buying stock and selling it, and that should show up in the operating activity section. So if we can't generate cash from here, we're in a lot of trouble. We're going to have to get it from another source, and we'll look at that in a future video. So basically we want to buy and sell stock and get more money from it than it actually costs or we have to pay to buy it. So looking at how it's set out, we start with the heading. We write cash flows from, in this case, operating activities. We put the inflows on top. They always go on top of the cash outflows. We put the cash outflows underneath, and remember they go in brackets, and you can see we're using the first column here. So the first column is where we put our individual numbers, like so. We don't put them in the second column, that's incorrect. And then we end up with the net cash flow from. So you can see this number actually doesn't go next to the last line here. We go across and down one and put it there. And we always want to write the same thing, net cash flows from, and in this case, operating activities. So it's similar to the income statement in a lot of ways, because a lot of the income statement is revenues and expenses, and that's obviously to do with the buying and selling of goods. So a lot of these items will appear in both. So for example, cash sales are an inflow and are a revenue. Credit sales are revenue, but they're not a cash flow, so they won't go in there. If I receive money from debtors, however, that's going to go in the operating section, but it's not going to go in the income statement. GST collected is an operating inflow, but it's not a revenue. Stock gain, no cash, but it is a revenue. Discount revenue is the same, but won't go in the cash flow statement. What about any expense I pay in cash? That will be an operating outflow, and it will be an expense. Any expense on credit though, so we might have the phone bill on credit, that won't go in the cash flow statement. Where it will go is as an expense in the income statement. What about if we go and buy stock? That is a daily thing that we have to do to run a business, so that's a cash outflow. Does it go in the income statement? It doesn't. It's not an expense until it's sold, so we wouldn't put it in. Cost of sales, there is the expense from selling stock. Is it a cash flow though? It's not. The actual cost of sale itself is not the business paying money. So it wouldn't go in the cash flow statement, but it does go in the income statement. Paying creditors back, that's a cash outflow, but it's not an expense, so it doesn't go in the income statement. Stock loss, that is going to be an expense, but it's not a cash flow. The business doesn't lose money from it. It's just that the stock is missing. A discount expense, that is an expense, but it's not a cash flow. It's cash that we've foregone. So it's not like we've actually paid money to a debtor. It's just that we've gotten less money from them. So that is not a cash outflow. GST paid, so the business has paid its GST. That's an outflow to do with the day-to-day running of the business. But that's not an expense, so it wouldn't go in the income statement.